Hey, this is Leo. I'm going to be giving an update on AMC. Before we go on, the usual, this is not financial advice, this is only entertainment, yada yada. So let's go ahead and dig right in. We're going to be looking at the technical analysis side of it, but we're also I'm going to take a moment to explain dark pools and exactly what's going on with the hedge funds and how they're able to essentially wash trade. If you're not familiar with what wash trading is, it's essentially two well, it could be one entity, one hedge fund, let's say, essentially trading back and forth with themselves or another party. And they do that so that they can guide the price where they want to go. I guess I'll go ahead and explain the dark pool thing first. So if we go here to stockgrid.io, you can look at the data. Now, this is represented in a negative number, but what that actually means is that in the last 20 days, they bought 194 million shares of AMC. But that doesn't really make sense because we know that retail owns 80% of the float, so that only leaves roughly 100 million shares to be traded. And whenever you subtract the amounts that are held uh, in funds like BlackRock and whatnot, it gets a lot smaller. It's certainly not representative of that value. So what exactly is happening here? Why do we see so much buy volume on AMC? Well, first things first, the in a dark pool, essentially what it does is it hides hides probably the wrong word, but basically whatever large orders take place in a dark pool, that does not increase the price. So if I were to go into a dark pool and buy 100 million shares of AMC from another institution, that wouldn't affect the price of AMC on the open market. So what they're doing is they're going in here and they're wash trading. So let's say I go in and I buy 10 million shares today because that's what I want to go out and I want to sell on the open market. So let's say that Citadel goes in, buys those 10 million shares, and then they turn around, they sell them on the open market to artificially lower that price of AMC. And let's say that they uh, have a partner called Schmerchu or Merchu. You know who I'm talking about, the other hedge fund. And they buy up those shares, and they're just essentially wash trading back and forth. Okay, so now they'll go back into the dark pool where they will essentially trade off those shares again for the money. So money goes one way, shares go the other, right? So shares are bought by hedge fund A, money is put over from hedge fund B, and the cycle continues. And so what that does is it creates artificial selling pressure on the open market, the one that retail trades on, but it doesn't affect dark pool prices. And so that's exactly what's happening here. And they do that over and over and over again. And that's how you end up with this big number of buys that are going on in dark pools. Otherwise, that doesn't make sense. You know, we see these massive short positions that the hedge funds are running, but then they're buying. Well, they're not actually buying shares to cover. They're not doing any of that. All they're doing is recycling the same shares that they have over and over and over again, constantly selling and buying back to push down the price. So now let's take a look at that on the actual chart, and I can show you where they're doing that. So I'm sure y'all can see up here, I've got tabs with Aussies and stuff. I'm thinking about getting an Australian Shepherd. Um, right, so let's go ahead and dig right in and I can show you, actually I can do it on the bigger time frame. So I've explained the algorithms before. This is nothing new and it doesn't just pertain to AMC, but if we zoom in here, it really gives an idea of how they're able to manipulate it and how they're able to manipulate it so well. So if I'm a hedge fund and I've got these 10 million shares and I want to figure out where am I going to sell, what's the most efficient place to start selling this thing? Well, I'm going to come in and I'm going to look for a 50% retracement, or their computers will. And as you can see, we get one right there. The little red line is going to be your 50% retracement. So I start at this point and I draw down here and we get a 50% retracement. And you can do the same thing over again. Actually, it looks like they would have taken the overall pull. sometimes whenever you get an extended move like this, they'll take the overall. I explained all of this in another video, so if you aren't familiar with it, go back and watch that one. The audio is a little bit bad in parts because I was out of town and I was having to use these um, microphone that wasn't as good of quality, but essentially if it goes past the green line here, the -236, that then it becomes an extended move, and really you want to see it hit this one before considering an extension. But anyway, so then they took the overall move there, and you can see it goes right back to the 50 where they start selling, and it continues on, and you can just see that pattern continue to repeat. And there was this one right here is where I wanted to break into. So where is it? So why is this off? Is this on? That's why it's on log. Whoops. Okay, so you can see that we take the overall measured move, it goes exactly to the 50. And so it's going to be similar to Russian dolls, how you have smaller measured moves within the bigger ones. And so we're just going to pull right off of there and then boom, look at that, right to the 50% retracement. So then those hedge funds take those shares and they start selling. And then there's smaller ones within here, but that's how they're able to drive the price down so efficiently. Let's see, where would the next one be? This one went through here. Looks like there's a small one there. Yep, there's a tiny one. But anyway, so then we get into a pull where we're going to pull the overall. Look at that, right to the 50. And they do this every day. This is the form of high frequency trading. Although, I mean, if you want to be kind of purist, it's more high frequency trading is taking place in milliseconds on the bid and the ask spread. But so it looks like they did an extended measured move after that one. And that might be it, or it might be. Is that right? Yeah, it looks like they took that one. So then come in there. Yep, so there we go. And you can just see how they just continue to work that down. I'm not going to go too deep into that, but essentially that's how they're manipulating the price. This is actually a very profitable trading strategy in and of itself, and it works across all markets, but what they're doing is abusing it. They're buying up shares in dark pools so that it doesn't affect the price, right? Because if they went onto the open exchange and they just started buying up a bunch of shares and then dumping them again, we would see it in the price, right? Especially if it's 200 million shares. That's quite a substantial amount. But they're able to go in and manipulate the price. That's a big problem, is this dark pool abuse. So we can see there's another measured move. So now I'm going to zoom out a little bit and kind of go over the overall technical analysis of where I think we are. I think it's very possible we're going to go lower, unfortunately. But if you look at the technical analysis, it's going to make a lot of sense. So let's go ahead and start with some market structure or market geometry. We start down here at the low, and all I've done is draw up a very simple channel. It's going to be your white line here. You got the little gray line for your median line. But as you can see, price respects that channel very much, comes back to it again. So I would expect it to hold the support here. We also have a couple of Andrew's pitchforks on here. But the ones that I want to pay attention to are this one and then this larger blue pitchfork parallel, because that's showing support. And also this little kind of a golden median line looking pitchfork here. Whenever price returns to a median line, one of the rules is that you expect it to either chop around, similar to here, or not finding any other good examples, but essentially it will chop around the median line before moving on. And so that's why this area is of interest. And now if we take a look at some of the algorithms, we can see that I believe the trend, it started there. So we come using log because this is on a bigger time frame, it's more distorted, but And the reason I'm going up to here, for some reason TradingView isn't showing it, but if I go on my TD Ameritrade account, I'm able to see that the price actually spiked up after hours to 77 and 30 cents is the high. So that's why I'm going up a little bit higher than what the TradingView high is. But if we look here, we see an area of confluence. We've got a 50% retracement where we know that just people in general, because of psychology, that's a very strong support. If I zoom in here and I look at the volume profile. So what this is showing you is essentially areas of price acceptance and lack of acceptance. So lots of volume means that the price was accepted here for a long time. Lots of trades took place. People like the price there. So if you come over here, you can see there's quite a bit of trading within this area, and that's why you see a high area of price acceptance. And then the little areas of lack of volume are areas where price just shot straight through because price wasn't accepted in those areas. And so it's quickly moving to an area where the price is being accepted and people want to trade in that price range. So the first thing we can see is, maybe I was on a different time frame. Let's see, I just looked at it. Sorry, I got to play around with this. There it is. Okay, so if we look here at the red dotted line, I marked that to show the drop in price acceptance. So what will happen is price will come down to an area of, we call this a low volume node, and then price will either quickly move through it or it will bounce off of that and move back into that trading range. So that, to me, is noted as an area of support. We're at the blue dotted line is noting a gap that needs to be filled in markets. Typically, whenever you have an overnight gap like this, eventually it will want to be filled. It doesn't necessarily mean that it has to be filled right now. And I thought that we had filled all the gaps, but that's because I had been looking on the daily chart. But if I look here on the 4-hour, I can actually see that the gap hasn't completely filled yet. So that's an interesting area that I would expect the price to go down to. Now, why did my channel move? I don't know why that thing keeps moving, but it's rather annoying. So that's an area of interest. Also, if we look here on the Elliott wave count, you see that I've got an A, B, C. This entire structure here looks corrective in nature to me. In markets, you have impulse waves and you have corrective waves. If you look here, it's very obvious that this is an impulse, and this slow, choppy grinding is a correction. And typically after a correction, you're going to see a continuation of that trend that you're on. And obviously we are trending up. You know, you can see this big impulse wave, and then you get this slow, choppy corrective pattern. And we're essentially seeing that same thing here. Now, damn it. TradingView drives me nuts whenever it tries to move things whenever I'm explaining stuff. Where was I? Now I lost my train of thought. Okay, so impulse waves and corrective waves. So this looks very corrective to me. But coming down here, now I want to look for an area of confluence, which is essentially multiple different indicators telling me that this is a high probability area that we are going to bounce. So we have the 50, we have the low volume node, we have the gap. Typically, whenever a gap does fill, you're either going to fill the gap and then continue on, or you're going to bounce off of it. I'm leaning towards we bounce off of it if we get down here. We don't have to get down here. Now, if we come up here to this cell, you can see that they sold that 50, and so their target is down here at the negative 236 at $24. Again, doesn't mean they have to get there. It could just go to the 50, and then that one would be a failure, and we continue on higher. But that is interesting because they are pushing the price down there. It seems that they want to get their fill. So, the next algorithm that we can see is right there. You can see they started selling at that 50. And so now they're targeting the negative 236. They've almost got there. They might be front running it a little bit. And all that means is they're They don't have their orders right here. They have them just a little bit to close that position. So that's interesting. We also have a good death cross happening here on the 4-hour chart. That's the white EMA is 200, yellow is 55. So whenever they cross, that's going to be bearish. So there's a lot of things indicating that we do come down here, but I don't think that we're going to go below this area. If we do, we could just come down to where we have this white trend channel and bounce off of there. I do think that we need to finish this fifth wave of the Elliott wave count. We have a 1, 2, very clean ABC. Then we go 1, 2, 3, 4, 5 for a third wave. We have our fourth wave, and then we come down to finish it for the fifth of the C, and that would imply that we are then going to continue on with the impulse. Now, with the timing of this, what I find interesting, now a lot of Elliott wave guys, they'll purely just look at the price action, but I like to look at fundamentals to a certain extent, almost like catalysts. So, for example, I believe it's, let's see, what was it? I just started a mind map for, oh, that's the VPN. Dang it. Hang on. Stay with me. Yep, so NSCC 2021-010, that's going to be going into oh no, excuse me, I'm reading the wrong one. It's the ACATS, so ACATS, that's the Automated Customer Account Transfer Service. So that's going to be going into effect on September 1st. So that's interesting because that essentially, from my understanding, it's the automatic transfer of assets in a customer's account from one brokerage to another. So that in combination with the SFTs, certified or financing, or securities financing transactions. That's what it is. So in combination with that going into place, a lot of that's lining up with end of September. September 1st would be right about here. So what I would expect is we come down here, put in the fifth wave, then we get a move up for a first, probably get up into the 40s again, and then bounce, consolidate a little bit. And I suspect that once they get these last few rulings, systems in place, that's when we would get a big third wave rip, and that's when the squeeze would trigger. So I'm thinking beginning September, mid-September. Until then, I'm expecting just choppiness. Come down here a little bit, probably scare some people, but I'm not too worried. The shorts haven't covered, so I'm not selling. And another thing, a lot of people, they get worried because they're like, oh, I got up to $77. I should have sold there. Well, for one, even for me, it's extremely difficult to time tops and bottoms to a dollar like that. It's extremely difficult to do. It's not worth wasting your time over. And the other thing is that what you need to consider is, well, what I'm thinking is that if I make, say, 200 grand, because it goes back up to, say, $80 or 300 or 400, however much it is that I would have at that point, that's not really, I don't want to say it's not life-changing money because I know for some people it would be, but for me, and it's not, making a couple hundred grand, especially in comparison to how much potential is behind this setup. You have the potential to make millions of dollars on this one trade if it does squeeze between the $1,000 and $5,000 range. I'm not speculating on anything above that. I believe that 1 in 5,000 is very likely. I think that it is very realistic. If it goes beyond that, so be it. But I like to be more conservative with my investments, so that's why I think between 1 and 5,000 is where I'm targeting. I'm not saying it can't go higher. I'm just saying that is where I'm basing my trade thesis on. Doesn't mean I'm going to sell within that range. I'm going to have to look at the technical analysis and see what's happening. But I think that is a very realistic price range that it could go to. Um, so I'm pretty much running out of things to talk about here. Um, but hopefully this was informative for y'all. If you liked it, please give me a like and a subscribe. I'm really bad about being consistent with making these videos. I just have a lot of other stuff going on in my life that I frankly just am more interested in. But I will try to update crypto videos more and keep up with the AMC. All right. Well, y'all take care. Thanks.